Hey everyone, thank you so much for joining me. I really appreciate it. Let's look at some earnings trades real quick. Okay, first let's review last week. Last week we had two earnings trades because the market was cratering and I didn't like the way it looked. Nvidia was about a $1,200 loser. I made a bearish Home Depot trade that was a $69 winner, but my Q puts were doing great. I did two of them. One trade made $497, one made $250. And I still have the third rollout alive going into this next week, but it's down right now. But we'll talk about that in a second. But so the hedges made $747. Unfortunately, the main trades lost $1,129. So negative 382 for the week. But the week before that was a good week. We'll see if we can see if we can put a good one together this week. So this week I have Target, and I believe it was On, the shoe company. Okay, so on Target, we're actually going to do a bearish loaded dice or a risk reversal. And on we're going to do a bullish fly. Okay, so let's go look at these trades. I've taken a look at them real fast, and I really like the looks of this Target trade. This Target trade right here. Look at this trade. You have not a huge buffer. Granted, not a huge buffer, only a 2.9% buffer, but it's only $500 risk. You get about 20% of the $500 back right away. It's $108 credit on $500 risk with a 3% buffer. But if this thing misses and drops, or if the market drops, it should take this with it. So I will share that one. I will share that one with you, and then let's go look at On. Then for On, I wanted to do something bullish just to have one of each. Bullish shot at earnings. I just wanted to take a cheap shot at earnings with something like a call butterfly. The On wasn't liquid enough to do the 3-leg risk reversal bullish. It just didn't work out. So we're going to do it this way instead. And this is not a credit trade. It's a debit trade. It's a $100 debit. What you're playing for is you're playing for On to do well on earnings and hit the upside expected move by the end of the week, which is like 49. And if it can do that, this should be a $200 winner on about $100 worth of risk. If it has really good earnings and blows past that, that's all right too. But we'd rather it stop right around 50. That would be ideal. 49, 50, 51, something like that. So that's our On trade. So let me make sure this is over our existing trade. All right, so I'll share both of those trades with you. We'll put them in the spreadsheet, and right now we have, let's check on the Q puts, the Q put spread. It's down big right now. Last week, the two hedges between them made 497 and 250, but the 497 was due to the market dropping over the weekend, and the 250 was due to the market dropping on towards the end of the week. All right, so we rolled that out, and now we have a third trade going, and it's the one for this week. Today. That this bearish trade for this week is one I showed in my early morning technical analysis session. So it's not that, but it's this one. Rollout, triple Q. Well, no, but it was a bearish trade though. So third rollout, bearish hedge. There it is, Qs. It's down $99 right now, but let's take a look at it. Okay, so this doesn't expire till actually. This expires Monday, Tuesday. This expires Wednesday, actually, but this gives protection until Wednesday. If the market drops, if we come in tomorrow and the market's down, it has to drop quite a bit. The market has to drop more than 2% before this kicks in. But if we have something, but if it's bad, it will drop more than 2%. It'll drop 4 or 5% in a couple of days. I'm not saying that'll happen, but anyway, if it does, this is what we have to hedge to hedge the other stuff we have, which is the ON trade, On trade, and the Target trade. Now, the Target trade is bearish itself, so we really don't need much of it. All this is doing is hedging that little ON trade because that's the only bullish trade we have. The only reason we're doing this is just because it's basically a free trade. It's a rollout. If the market keeps going down, then we'll keep rolling and making money with these bearish positions. If the market stops and goes up, this will expire worthless and we'll probably quit doing them. But for now, that's our third rollout. There's only a 32% chance of profit, and it's, because we made that trade right before the market blew up on Friday. So let's look at the market. Speaking of the market. All right. So all right. Well, let's look at, all right, Thursday, Friday. So last week, right around in here, we made the first of the hedge trade. And then the weekend happened and the market dropped way down here. Monday, then Tuesday happened. We covered that trade for $500 and put on another one. And then when this happened, we were able to cover that trade for a couple $100. And we just keep pushing the strikes down. But then once we push the strikes from this location, we pushed them quite a bit lower. We need a continuation lower than this low for that trade to continue and be profitable. But that looks like that's exactly what it's doing. We're right on the money with the bears have just been in control lately. The bears have turned this area right here in the Qs between 510 and 513, and it was a bullish area, but the bears have captured and turned it into bearish area. So we'll see here. We'll see. All right, I'm going to get out of here and share those trades with you in case anyone wants to put those on before the end of the day. All right, guys, have a good day.